All right, good morning, everybody. This is Scott Pearce with the Premium Cigar Association. Happy Tuesday morning, everybody. Hope everybody is in the grand swing of all of their holiday shopping spree. And as we know, towards the end of the year, it kind of gets down to tax time as well. Something came to our attention recently from a former board member and retailer of ours, Harris Saunders, about this employee retention credit. So we started talking and we reached out to some folks that we've worked with before. And we thought this would be a good idea just to get out some information for our retailers who may not necessarily know about this. So that way you can kind of be informed and be able to ask the questions you need to ask to your tax advisor or anybody else that you use in order to learn more about the program to see if you qualify. So on that note, I'm going to go ahead and bring up Harris Saunders from Birmingham Cigars and More. How you doing, Harris?
Hey, Scott.
And here we have Darren Berkowitz, who is from Refunds Pro. How are you doing, Darren?
Great to be here.
And last but not least is David Winarchik, who's also from Refunds Pro at CPA. And these are our tax experts who have been dealing with this quite a bit over the past little while, I would imagine. Yeah?
Yep. Good morning.
Good morning.
Good morning. All right. So first things first, can you kind of briefly explain what the ERC is so that our members understand? And I'll let David and Darren kind of take that. And then Harris will get into kind of how you learned about it and what you did. And then we'll go into how our members can kind of take advantage of this. So David, Darren, what is the ERC? And I can pull up your slides here real quick to kind of give us a little breakdown.
Go ahead, Darren.
So the ERC is basically a tax refund of payroll taxes that businesses have already paid. And it was passed as part of the CARES Act to reward companies that were negatively affected by COVID, either in the form of a revenue reduction or a forced government shutdown. So it's actually a refund of payroll taxes that were already paid in 2020 and 2021.
Okay. And so in terms of that, so one of the big questions, any businesses qualify who didn't think they were eligible on your slide there, kind of talk about that. One thing we were talking about before we got on here was PPP and some of the questions I've gotten around that. If you took PPP, are you still eligible for this?
So as of last November, the law changed and you are eligible to take both ERC and PPP. As long as you don't double dip, and the tax professionals are able to do that analysis. But that was a big change last November. A lot of CPAs we've seen give our clients essentially old information that if you took PPP, you automatically don't qualify, which is not true.
Okay, great. And so the other aspect of it is that you're looking at things like losses in certain components. Can you talk a little bit about that? And Harris, if you can kind of jump in here, because I think that you talked about where you initially thought that you weren't eligible. So if you can talk a little bit about how you kind of went through the process and found out that you were eligible, that'd be great.
Yeah, definitely. So initially I started hearing about this tax credit and really wasn't aware of what it was. And so I asked my CPA about it, and he initially really wasn't very aware, of it or how to file it. So just kind of asked him to dig into it and find out if I'd be eligible. Really thinking I wouldn't be, just based on sales and other things. And turns out we were eligible. We filed it, and it turned out to be a really good thing for us. And that's when Scott and I started talking about it. And it seems like a good portion of the cigar industry would qualify for this, and it'd be, a nice thing to check on and see if you qualify for.
Yeah. And, and so talk a little bit about where you talk about reduction in revenue. This is for all three of you, because I know that obviously there were shutdowns, there were periods where there probably was reduced revenue. We know in the industry, obviously, that we've seen some increase in sales over the past little bit here. But can you explain a little bit about that? Because some folks might think that they don't qualify for this because they were having some good sales maybe towards the end of the year as things kind of went on. So is it just a particular portion, or if you experience any decrease in sales over that period of time as a result of COVID, does that then qualify you for this ERC?
Do you want me to jump in here, guys?
Yeah, that's great.
Please.
Okay. So the program actually has some very unique rules. So what we have to do is compare on a quarterly basis your 21 results to your 19 results. And what that means, though, is that while your full year may have been up, if you had a particular quarter that was down, then that quarter may qualify. Um, so it depends really on the results per quarter, not necessarily for the year. I've had clients that started out the year poorly, and so they qualified for the first quarter. They may not have qualified for the full year, but we're not looking at the full year. We're looking at an individual quarter. Then secondly, I've also had clients, the IRS rules specifically state that if a segment of the business is down by 20%, that the business also qualifies. So, for example, and I know that you guys are not a or a drive-through restaurant, but I've had clients where the dine-in was shut down, but the drive-through was left open. The dine-in then qualifies because it's down by more than 20%, which then makes everything qualify. So we can look at
Interesting.
our segments. Now, the IRS rules specifically state, though, that the segment has to be a significant part of the business. In the IRS rules, it gives the example that the salad bar at a grocery store, if that's down, that doesn't qualify because the salad bar is not a significant part of the business. So there's a lot of different rules that flow into this, and that's why you want to have an expert look at it, because they have to understand what all those rules are and understand how to look at your business to make sure that you're qualifying the correct way.
So that actually brings to light a very interesting question I have is, so we have a lot of businesses that were shut down that ended up starting sort of online, kind of grab and go delivery type of things. I'm wondering, would that then qualify as a new business startup? I mean, it aligns a little bit with what you're saying, that because we did drive through, but I mean, like, they would have, curbside delivery where you couldn't come in the store, but they kind of still had some of that. So that impacts them significantly. But would starting an online component to your business because people couldn't come inside, would that qualify as kind of a new business startup there as a result from COVID, or is that kind of just ancillary?
The new business startup only qualifies if it is a new EIN number, so a new
Gotcha.
tax
Okay.
filing. But just going along the lines of what you're saying there, let's say you were, and again, I'm trying to avoid using your guys' business specifically, but let's say that you were a Subway, and a Subway is able to keep their sales up because they're now using a third-party delivery service. Well, if their in-store sales are down because they're now doing everything through the third party, even though their overall sales may still be up, then their segment in-store sales may be down even though the overall was up.
Got you. Okay.
So again, going back to what you're doing, then if you had people doing delivery, but you have to be able to segment it. And I don't know how, if you guys can do that, but if, or not you guys, but if a
Yeah. Yeah.
store can do that and they can break out, this is what our sales were, this is what our sales used to be with people walking in, this is what our sales are now, but half of it is going to be delivery service. That's a new segment, the delivery business.
Gotcha. Okay.
Yeah, and what you mentioned was kind of our situation. We were, down the first quarter of 2020 and then recovered. And I think a good portion of the cigar industry was that way, but I think that's what allowed us to qualify.
Yeah. So the segments it's an important part of the program, but you have to be able to verify it, because at the end of the day, you want to make sure that this is all legitimate, legitimate information. And as long as that's the case, if you qualify, you qualify. We're happy to help.
So in terms of this, what can people expect? Okay, so I think I qualify. I think I meet some of these guidelines. How much will you ask? How much of a burden is this? I mean, look, it could be very worth it, right? And so my question there is, okay, what are my next steps? How deep do I have to dive into this? What can I expect in terms of putting aside time in order to do this? Because I think that Harris, you definitely would say it was worthwhile. So just kind of give an expectation, really. What are we looking at? And because I mean, to what you just talked about there, this is what it kind of seems like to me is like, oh, God, I got to go back now, and I've got to. If I did segment off these particular areas and the amount of paperwork, amount of time I've got to dive into, I know a lot of our folks don't have a ton of time, especially right now. that they'd be able to invest in that. So what can what can one expect when kind of diving into this process and the hurdles in order that they have to overcome?
I mean, for us, it really wasn't difficult. I mean, we had to provide some paperwork, but I mean, it was nothing complicated. It's really
Yeah, most of
pretty
this most of this should be information that you already have.
right.
It's ADP or payroll reports. Sorry, I use ADP myself. So, but it's just payroll summary reports from particular quarters. And if you use QuickBooks or a similar accounting software, it's running a quarterly financial statement.
Okay. So you can just get high level just to show that the quarter was down, but in terms of some of the other areas that you were looking at, if you have a space, particularly where it's shut down inside, but you're able to sell, as long as you're able to find numbers that can show that. The question, I guess, where this comes from, and Casper Cigar Company, I'm going to show this real quick because I think it's kind of relevant here, is never 100% shuttered. He took over right beforehand, before the pandemic. So I guess my question, which will kind of lead into his, is that being able to show those segments if you necessarily weren't down is one aspect of it. But what if you're kind of in this situation, or right before the pandemic you took over, so he doesn't really have any historicals? Or what if you started right before the pandemic and don't have historicals? Are you just kind of out of luck there, or kind of what happens if that's the case?
Okay, so they started. What I'm trying to read the message. When did they start?
So he took over an existing shop
Shop in
February of
2020.
2020. Yeah.
Okay, so you can be asking one of two different questions then. So first off, if you are a startup company, which means you started after February of 2020, then you are considered a startup company. And if you're a startup, you automatically qualify for quarter 3 and quarter 4 of 2021. So, so by rule, it can't be down because there's nothing to compare it to in 19. So it's simply you will qualify for quarter 3 and quarter 4. By the way, if you had existing results in 2019, you can't qualify for quarter 4. But if you're a startup, you automatically qualify for quarter 4. I know, it's a bizarre rule. Also, quarter 3 and quarter 4 are capped at $50,000 maximum refund per quarter. So in the normal program, you are not capped, but in the startup program, you are capped. So that's if you started after February of 2020. So let's say you started in September of 2019. Well, how do you compare quarter 1 of 21 to quarter 1 of 2019 when you didn't exist in 2019? So if that's the case, you have to use, trying to remember the exact terminology used by the IRS, but you basically have to use your best guesstimate of what the quarter 1 would have been. And so the IRS doesn't give you specific guidelines. Whoa, is that me? It doesn't give you specific guidelines of what quarter or how to do it, but it says that you have to use a reasonable estimate of what the quarter would have been.
Gotcha. All right. So then a related question here, Brian asks us the same kind of thing, is they opened up in October of 2019. They had periods of full and partial shutdown during 2020, but since they didn't start until Q4 of 2019, they have no way to show down revenue in 2020. So is it
right, and that's where we have to use some reasonableness.
Yeah.
So, and does that make it more of a challenge? Yes. Does it make it impossible? No. So that's where we have to work with you and try to figure out what would be a reasonable estimate of what these quarters would have been had you been open. And then we can compare it that way, or we can compare it to a reasonable facsimile of 2020, a quarter that wasn't shut down. There's a lot more. There's a lot of different ways that we can look at this. So we just need to look at it, try to make sure that it makes sense, and that it would, pass the sniff test, I like to call it. And as
So are
long
you
as
able to, sorry, I was just going to say, are you able to use, like, if you're in one city and there's a city that's across the way that had been open maybe for a few years, are you able to even use, similar numbers that you can project from like what other companies might have put out there? I mean, obviously you're looking at different details from other companies' books and things like that, but I mean, are you even able to use like data like that for what you're for these purposes?
Honestly, I've never had that specific question, but it's an interesting way of looking at it. And if it looks reasonable, the IRS rules actually don't specify how we're supposed to do it. It just says that we need to use a reasonable method to compare 21 to a prior quarter.
Okay. Well, that works then.
Yeah.
Um, so
And also, I do need, when somebody says that they started in like October of 2019, my first question is, did you file a tax return in 2019? Because many times people are open trying to get, they're doing a build out. Well, technically they're open, but they're not really open. There were no sales. Did they file a tax return in 2019? Because when you actually opened is when you started filing taxes.
that's a good point. Then going back a little bit here, when we talk about to kind of showcasing it, if there was a law in a state that said you could not have anybody inside and you were still having sales, is it easy then to say, okay, and segment it out and say, okay, we know we had sales. Let's just say we were shut down from February all the way through July, but we had sales in February through July. But we know that that had to have been different aspects of the business. So it had to be different channels. We either were doing it, just curbside delivery, or we were delivery, or whatever the case may be, because no one was coming in. Is that an easy enough way to segment and say, okay, we didn't necessarily do it that way in our system, but it's clear that nobody came in the store because there was law from February to July that nobody could come in the store. So we know that these sales here in these months were definitely a different channel than what is our usual storefront that people are coming into.
That would make sense to me.
Okay. Okay. And then, sorry, I'm going back and forth here, but Brian,
Oh,
you
no,
said,
that's fine.
we did file. They built out from July to October. So to your point, they did file a 2019 because they were doing their build out from July, August, September. And then they opened up in October. So the doors opened then.
Yeah. So in that case, we would have to try to figure out a reasonable, estimate of what we should be comparing to.
Gotcha. Okay. And then, so really ultimately, to kind of leave with this here, Harris, from your perspective, as a retailer looking at this, just sort of a good kind of last piece, high level advice for retailers as they're going about this, and in terms of this, and why you decided to pursue it. Kind of, you were pretty fastidious and work with your accountant to make sure that you got this done. So clearly it was a worthwhile endeavor for you. So just last piece of advice, and then we'll ask David and Darren.
I mean, I think the biggest thing I would say is it's worth checking into. Worst case, you don't qualify. I think it's something that most of the cigar industry will qualify for, is my guess. I don't know, but it was very easy and straightforward. I mean, not a big burden to try and find out to qualify. So I think it was very worthwhile. And I've talked to quite a few people in the cigar industry that weren't aware of this, didn't know about it, or weren't sure about it. So, I think this is a good time to check on it. I may be quoting this wrong, but I think the program's coming to an end soon. So it's, we're kind of down to the last month or two to,
I think it ends January 31. Is that correct, David, Darren?
My understanding is that as a tax credit, you have up to 3 years to file an amendment on your 21 tax return.
Oh, well, even better. So yeah, I think it's worth checking it. And that's what I would say, is just I would check on it and see if you qualify.
And so then for David, Darren, obviously, folks, you reach out to your accounting advisors or CPAs if you have any questions on this as well. But David, Darren, any last pieces of advice? And then, Bob Roberts has also asked, contact information so that he can get a hold of you. So where can folks, in fact, find you should they have any other questions for you all as it relates to the ERC?
Yeah, the best thing for us is visit refundspro.com, refundspro.com. And essentially, I think my advice echoes Harris's. Spend the time and see if you qualify. As you can see, the law is very complex. But if you were negatively impacted by COVID, your revenue was down, you had supply chain challenges, you were forced shut down by the government, it's worth the time to spend to look and see if you qualify, because the money can be significant, and obviously to small businesses especially. The other thing I'll mention here too is to file as early as possible because the IRS is very backlogged. So sometimes the credits do take, on the short end a few months, on the long end it could take a year to get the money. So you want to, even though the program is going to go on for a little bit, if you do qualify, you want to file as soon as possible.
Perfect.
Yeah, and I can only echo some of this. Take a look. It really, when I've talked to my clients and I've asked them about how long it took to prepare the paperwork, most of them are telling me between 5 and 10 minutes. But let's just say that it's an hour, 2 hours.
Yeah.
Even if you don't qualify, I mean, how much of us can say that we, don't have an hour to 2 hours just to see if we qualify for what can be a huge benefit? I mean,
Yeah,
it
and I
makes
mean,
sense not to do it.
Yeah.
some businesses are getting 50, 100, 200, 300, 400, $500,000. I mean, it depends on how many people you had on payroll and what quarters you qualify. But the credit, it can be a very significant amount of money. So usually it's worth the time to check on it.
And I know that I've prepared some where people are getting as little as $6,000 to $10,000. So I don't want to make it sound like it's going to be these hundreds of thousands of dollars. Some people it isn't, but that's because they're a small business to begin with.
Yeah. Pretty proportionate, right? Well, look,
Yeah,
if you're a small business, I mean, every dollar back counts, especially, with inflation going the way that it is, any money coming back to you is going to be a good at this point, right? You want to come in this way, not going out the other way, especially as it relates to taxes. So
exactly.
it's a good thing. All right, David, Darren, Harris, and Harris especially, thank you for reaching out to me a couple weeks ago, bringing this to my attention. David, Darren, thanks for responding back when we put out this request through Thomas. And we turned this around real quick because we wanted to get the information out to everybody in a timely fashion. So I really appreciate your all's attention to this and time. And then again, for anybody who's watching this recorded wise, again, refundspro.com is where you can find David and Darren. You can always reach out to me for any contact information there as well. And as always, please this is not any sort of legal or tax advice here that PCA is giving. Please make sure that you reach out to a certified public accountant and whomever you work with in order to get the best advice and work through this with. So again, thank you, gentlemen, very much. Appreciate it. And hope you all have a great rest of your day. Thank you.
All right, you too.
Take
Happy
care.
holidays.
Bye.
Happy holidays.